Sorry, guys. All right. Good evening, Ken at Tortoise Capital Nightly Strategy Podcast for November 6, 2021. Looking at the swing trade frames. The first one is from Les. So I think I was wondering why you went long here, but then I realized I think that you were showing that was your entry. What I want you to do is when you enter short, just use a red dot. Okay. So that should show a red dot for entry. Then we know that thing is going short. And then your cover was here. Then we know that was the close. And then if you like, you can draw a trade frame box around that. So now we can see that is the trade package right there. So you made this trade. And what I need you to mark up on this is what was the R capture. This looks like about a half an R. So if that's your risk, and this is your capture, that looks like about 0.5. What the point I want to make here is just as we're working on this. Z3 excursion, 1, 2, 3, that becomes bar 1, bar 2. And so the bar 3 entry would be right here with a stop down below to here. How do you like that trade? This would be the SSC entry that takes and we talked about that today at the in the Q&A session. You know, here's a case where you have a harsh winter. If you're using this as the MACD, you can see that's you're getting the change right about here, but this is such a small compression. It's hard to see those changes. So that's why I like having the color codes transferred to the RL10 so I can actually see the color change of the seasons right on the indicator. Talk to Jeff Boccaccio at rfactory.com. He has the programming on that. I mean, you could also use the TC 2000 bundle, which we sell as a convenience. Just saying. No. So anyway, this would be a 1, 2, 3 entry right here with a stop down here. I now want you to notice here's your P1. That's where the RLCO happens. And here's the PSAR flip is late because this acceleration is so great. This is where we take that protective entry, if you will, with the PSAR when price goes through the PSAR. That way, while you're waiting for the RL10 to pass through, you don't know that this was going to sell off and that you could get a nice entry in here. I mean, there could have been every reason for that to keep going, and then we'd be chasing the entry because we were waiting for the PSAR to flip. So in cases where you have that kind of aggressive move, then what we like is the price, not price going through the skin of the dragon, but the price crossing through the PSAR dot. And then if you take that one, you can come down here and you know that the bottom of the RL10 is where that PSAR dot is going to print. So you can take that as your risk box. You can also take the bottom of the dragon if you want to be aggressive, but I like I like for consistency. What's the hurry? I like taking the bottom of the RL10 because it's clean. And then you get this whole trade. Now, I would treat this one here as a kata 2 because you did have the RL10 roll over, but it didn't even get through the dragon and then back. It just went flat. And so I treat that like as leg 1, pause, leg 2, and I treat that one right there as the kata 2 entry. By the same token, there's another one. There's a kata 2 entry right there. Now on this rollover, that's a 1, 2. This would be the 1, 2, 3 exit, especially if you had taken this as a third entry. So if you got like this one as your first entry, then the second entry, and then the third entry, when this rolls over, five bars where it did not go higher, and then you get a 1, 2, 3, that's a good exit. I mean, you can always take this one here, but I like the 1, 2, 3, especially because this one is starting to lose money already. So this is your short. That's your cover. And that's fine. Now, what I like here is a 1, 2, 3 entry, re-entry here with a stop down here. That's a way to do it. You could also take this here, waiting for, actually this one here, I should say, waiting for the essentially kata 2 and then the price coming through the dragon, hitting the PSAR and taking off with your stop like at the bottom of the dragon or at the bottom of the RL10. Either one of those would be acceptable for a reentry. Okay, so good work. Excuse me, let me try to get this moved over here. Whoop. Just trying to get a little more screen real estate there. All right, so the learning points on this one. So again, we always like we like to study the RL10s. What I want you to notice here is you have these two couldn't make a new higher high. And there's your PSAR flip, right? And now you have this lower high. So you have like a 1, 2, 3. That makes this a very reasonable short because you're getting a collapsing dragon on the belly of the dragon. This is where your collapsing dragon on the belly of the RL10 would be. In both cases, you just pick the PSAR as your risk box and just be done with it. And you get a really nice harsh winter. Then you have the RL10 bellies out. You have the P1. That's the RLCO. This is where you got, because this accelerated so nicely, you get the PSAR entry here with the stop at the belly of the RL10. And you get this nice trade like you got here. This entry was waiting for the PSAR dot flip, and it's still the same risk box. This one just gets in a couple of days earlier. And you have a very nice trade. And there's your 1R. This is about 2R. And I'm trying to see if you've got the, did you exit in here? Oh, A 1, 2, 3 exit from the 30-minute chart. So that's probably what, here maybe? And that's a nice, so that's about a 1.2 R win. Perfectly done. This is where you could re-enter. And I'd probably put a stop at the bottom of the dragon, because that's about the same size of your standard wrist box. That wrist box is about the same as this one. And what you have is the strength of this move gives you confidence that there might be a second leg moving up. But you got to watch for resistance right here, and the top of the dragon, and the top of the RL10. Both of those are places where this trade could run into resistance. So you got to be ready to 2R battle drill this thing, or trim it at any one of those resistance levels. This is the preferred entry, and that's very nicely done. All right, this little pattern over here is one we call the on the Z3 pinch. See how tightly that is pinched? And here's your like a Z3 breakdown. It fakes 1 and goes 2. So I like taking this one short right here. I like taking this short where the Z3 breakout occurs. But when it reverses quickly, I like to then get long right here. Just cash that when it comes back inside the Z3. Or if you just wait for it to re-enter the Z3, the previous Z3 line, you can scratch that because you got short here, and then it reverses. So then you can get long here. And the idea is that you're trading for the far side of the Z3 pinch, or in this case, what ends up being the Z2, and then you get this trade. So that is the fake 1, go 2. So it fakes 1 leg down, and then it reverses, and then you get leg 1, leg 2. That's what we mean by it goes 2 legs. And the giveaway was this, the PSAR flip inside here. So that's part of the Z3 pinch trade pattern, one of the more advanced patterns. Now what's nice on this one is you have the peak of the RL10. This peak of the RL10 is about the same level. But then when you get the PSAR flip and breakdown, nice work getting short. This is your wrist box. You get this trade. This was probably starting to recover. And a 3R gain was down here around 24.40. So you captured 3R. And that's what I mean about the fear versus the greed move. This is why I love the collapsing dragon, is because those moves, when they fail fast and hard. Whereas these moves, after this little fake run up, the fact that it didn't continue and then started to reverse, that was the takeaway. That was the tell. And then notice how this thing just marches up, climbs up the stairs, falls out the window. So that's a nice 3R. Now here is a continuation entry. So this little gap up got you out and you locked in about 3R. Then when it rolls over and fails through the previous low, that's another short. And now you're in the money already. And this thing could continue to fail. In fact, the size of this fail, we think of that as leg 1. And then we think the same size move, cut and paste, leg 2, we think could then come down to here. That's a nice one to get started intraday, by the way. All right, zebra. Again, here's your rollover. There's your move outside of the river. There's your Z3 pinch breakdown. There's your short. This whole move is a harsh winter, which then sets up. Now, this failure to fail further, or FTFF, you'll see in our glossary. That's a sign, right? This failure to fail further is information. It makes a little shelf. There's your P1. There's your regression line crossover outside the river. Here it crosses the baby dragon, enters the dragon, crosses the spine, leaves the dragon. You could actually buy this one because it broke the PSAR. So you'd probably end up getting that entry there, which is fine. And you don't get the PSAR dot till the next day. And that's a clear indicator. This is also by this time an owl entry because you have the harsh winter, P1, RLXD, and now the slope of the belly of the dragon is up and the slope of the RL30 is up. That makes this an owl entry. And then with a stop at the bottom of the dragon or at the RL10, you have you're in this trade the whole way. This would be a COTA 2. And that could either be a second position, or if this rollover had gotten you out, then this is like a 1, 2, 3 re-entry. Either one of those entries is fine. Here's your wrist box. It looks like you went to the edge of the dragon, though, with a tight wrist box, and that's fine as well, which is nice because then your position size is based off of this, and you get something like 1, 2, 3, 4, 5. Whereas if you're using the larger position sizing box, then that is about twice the size. So that's either 2.5R or 5R, depending on which wrist box you used. But this little rollover and an exit is nice. So you don't stick around. The next day, if you hadn't taken that exit and it starts gapping down and going, then that's a good exit there. And then this was a great trading day because you had a strong directional move all the way down, a reversal, and it cruised all the way back up. That makes this a possible re-entry. And the reason you like that as a possible re-entry with the stop here. Now you've got one, you'd have like 2R in hand and still going. So that's zebra. Here's NVIDIA. Ken H asked me, what is a Zeno stop? So there's one of the foundation's Q&As talked about this extensively. So a Zeno stop is simply, briefly, the Zeno stop is a conceptual framework for understanding that, Zeno said, if you were here and you were trying to shoot a target the arrow would never get there because there was always some amount of time that it would take to cover one half the distance. And then whatever that distance to the target was, there'd be another half. And that would take some amount of time and then half again. So you were always spending time to get halfway and you would never get to the target. He didn't understand the concept of limits in the calculus. The calculus hadn't been invented yet. But the idea there is that if I have framed a trade, like it ended in a doji, and I said, that was my trade frame. That's my, and then I'm going to, I want to get long here. And I want to get short there. And here's my risk box. And I've set some kind of price target up here, which represents at least 2R, because now I have, 1 unit of risk, 2 units of reward. There, I now have a trade frame that's favorable. So you could imagine that if I never move my stop and price now starts opening up, bang, it goes through here. Now I'm long. And now this thing gets all the way up to, this thing gets all the way up to like 1.99. And all that's left is 0.01 before I hit my 2R price target. If I never moved my stop and my stop is still down here, I'm actually risking $2.99 in order to gain another 0.01, with the idea that being, hey, if it got to my 2R price target and I just cashed it because I got 2R, would I be happy? Yeah, I'd be happy. So the only thing that's stopping me from cashing a 1.99R win is the fact that there's some theoretical 0.01 ready to go. But what I'm doing is I'm risking. And what if that thing, instead of going up one more penny, started to roll over and said, oh, I'm going to honor my stop. And it comes all the way down here and then hits me out. And now I lose -1R. Whereas up at this point, I was plus 1.99R. Well, when I first started that trade, I had 1 unit of risk against 2 units of potential reward. So that's a 2-to-1 relationship, reward to risk. But on this side of it, I was hoping to gain another 0.01 of reward, but I was risking $2.99. That's a 1 to 299 reward to risk ratio, which is really wildly skewed. So that's not a good idea. So clearly what I have to have is I have to have some kind of stop that as that's moving up, I can start locking in pieces of these gains so that when I get up to here at 1.99, I'm not risking more than 10 cents to gain 1 more cent. So here's the idea. So if that is my upper limit, my price target, and I see, and my price is coming up here and it's almost there, and now it starts drifting down. Now we know sometimes things will drift down and then keep going. So I want to give it some level of wiggle room so that I don't miss this price move after my known resistance. Well, the real answer is if I know how to re-enter, then I don't have to worry about giving it too much room because of a fear of a reversal that I missed. As long as I know how to re-enter, I can make this stop here as tight as I want it in order to preserve the gains that I made on the way up. So as this thing is moving up and I'm locking in gains, as long as I know how to re-enter, I can have a tight stop. So the idea of the Zeno stop is to acknowledge that the closer that I get to resistance, maybe the more, the tighter that my stop has to be. So if price, here's my trade frame, and here's where I got long, and here was my exit. And now price opens up here and goes through my entry, bang, I'm long. Now, as this thing starts moving up and starting maybe to stall, my stop doesn't necessarily just trail that. Oh, it should be red, sorry. So that I have some kind of constant trail. Now, when I'm up here, look how much I'm giving back in order to hold on for that extra little piece. So maybe what my stop has to be instead is that as I get closer to the station, maybe my stop has to begin to accelerate so that as it's getting closer, I'm giving back less and less. So that whole idea about how to accelerate your stop going into a known resistance area, like I'm not allowed to be surprised if it rolls over at resistance. That's what resistance was. The last time it got up there, it failed. That's why we mark that off as resistance. So if I mark that off as resistance and it comes up and starts to fail, I don't want to stick around a long time. I'm ready to have a really tight stop. So the path that we take to accelerate the sniper to capture more and more of a better and better move is what we mean by the Zeno concept. Now, the way you and I have worked that is that we treat like the PSAR stop as a sniper so that we would capture this. And then we use the Bollinger Band mean as the relaxed managerial stop. And after we get a certain distance up the stack, we put 1/2 on the sniper who's being tracking the PSAR, and 1/2 on the Bollinger Band mean. And that way, what we end up getting actually is half is the average stop. This one takes care of getting an early aggressive stop, and this one protects us from premature exit. Now, the final piece of that puzzle is that if I have a really good move and then it starts to fail, like especially if this is a parabolic move up, like it really accelerates, like this thing is accelerating. Look how far away the PSAR stop is, and that's the aggressive stop. And look how far away the managerial stop is. Like, I don't want to give all this back, even though this is usually my aggressive sniper. So what I can do is I can have an even more aggressive sniper and just say, I'm just going to lock in my stop like you did. I'm just going to lock that stop in here before too much comes back. So I can have the Bollinger Band mean, I can have the PSAR for my routine sniper, and then I might just pick a dollar figure to decide I'm going to lock in pieces as I go up, and then just take the whole shooting match. So the idea then of the Zeno stop is a recognition of Zeno, the philosopher, mathematician from ancient Greece, that talks about how to think about exiting in a successful trade. Like, you were already 8.5 R on this one. So if you weren't thinking about it, you might say, well, I'm just going to honor my stop and let it come all the way back to the PSAR and give back all of that. No, you wouldn't. So you have already sort of internalized the idea of the Zeno stop. Is that clear enough to everybody? That's a really important principle. And in order to really master that, what you want to do is listen to the 2R battle drill. That little 11-minute lesson, you should listen to it every day for 30 days, because it handles exactly this issue. All right, so let's take a look at Ken's trades here. So the first one, he gets on the intraday basis, he got an SSC and made a nice trade, and then he sadly Says, yeah, I missed the SSC and I missed the leaving the river and I missed the continuation and I missed the Z3 breakout. So yeah, missed all that. So what? So did you leave it all? No, he frames the trade again. Now notice he gets like a 1, 2, 3. And this trade, which becomes 8.5R, is this trade. And what he noticed was the gap and then this little sideways quiet channel being formed with the Z3 pinch, but a rising RL270. And then when it breaks out, he buys it with a tight stop down here below the PSAR and manages it and manages it. He's probably kicking himself in the tail for not taking the gap up and go. But this thing on a 30-minute chart rolls up, pulls back, and he had locked in his stop here by this time, rolls up and starts coming back. This is where I want you to get out. $6 higher, which is an extra R compared to this risk box, but that's a good exit. He was waiting for the sniper exit. Notice the PSAR. He takes the sniper exit on the 30-minute, and that's a beautiful 8.5R. And this is an example of using the 30-minute chart to tighten up your management lens on what is an amazing run up during the daily chart. This allows you to fine tune that exit. And you can see that this price action looks different than this runaway upward move. That thing was topping out and rolling over. So he gave it a little bit of room, takes the exit at the PSAR, locks in 8.5R. And that's how you do that. Here's the swing trade he's got in Boeing. This one's still open. Now notice there's this peak and that valley in the RL10. There's your harsh winter. Here's where the RL10 bottoms out and reverses. This trade, which is like right in the elbow of the dragon, that's like an SSC like you cannot believe. He framed that trade here, and he was ready on this day to buy. He was hoping for an orderly exit and then a breakout above there where he would buy it right here. But there was a gap, and there's his 30 minutes. So so inside of this gap up and go, he ends up getting his entry and using the same kind of risk box. He just uses a risk box like that. It works up in his favor, closes near the top, and he just raises his stop from here up into here. Now notice the PSAR stop here. If that thing rolled back tomorrow or Monday, then he only gains this much. So he raises his stop to here in order to lock in more of that gain, and he's given it that much wiggle room. I'd probably set my stop here because I want to capture both of those pieces, and I only want to give it that much room because this feels like it's rolling over. I mean, this could be, you never know, but this feels almost like it's rolling over. So if this is going to work, it should just keep going, and then that's going to be a good stop, and now you can lock in that extra piece. So I think that's what I would recommend. That price is about probably, I'm going to guess that's probably about 223, but you can figure that out. But that's a massively good win also, at least 2R. Here's the swing trade now on, what is this? AMD. Here was one trade that he did, locked that in and cashed. I think missed the SSC. So now you have the harsh winter. Here's the RLXD. Probably could have had this one here once it clears all this crap with a stop down here. He does frame the trade here. This trade on the 30-minute chart looks like this. So he had framed this, it broke out, he gets the entry here, gets his wrist box to the bottom of the dragon. It works in his favor. Probably is kicking himself in the butt for not taking that second move. But it continues to run up. Now, this thing runs up near the Z3 line and then starts to roll over. I probably want him to take that exit when it crosses through the dragon, because the dragon is rolling over. I want that exit, and I want to keep that piece. But nevertheless, this move from here to there, risking this much, is 1, 2, 3, 4. I want 5, but 4 is pretty good. Again, this is the case of using the 30-minute turbo time frame and the 1 day for setup. Oh, this trade here is that trade. I'm sorry. So he got 1, 2, and then exit. So that was a massively good one, if you remember from last week. So this little trade gives him 4R, and then this is how he's using the 30-minute chart to maximize the gains. Again, I think that's given back too much. I'd like to see you lock that in. Here's Simon Property Group. The whole commercial real estate had been in this tight sideways chop. Here's the Z3 breakout at about 139. And we'd like to have that one with about a $7 risk. So an entry at 139 and it's out at 169. That's plus $30 on a $7 risk. That's about a 4R entry from here. Now, what he gets is leg 1. Now, again, notice how this thing was rolling over and it voted to the upside. And he ended up framing this trade on the 30-minute chart where it gapped up, sold off, kind of stabilized. So he sets that trade box up, buys the breakout, uses the PSAR dot as the risk box. And really, he's looking at that whole box right there. But the PSAR gives you a nice measured risk right in here. Gets a nice run up immediately. This is where I get really tempted to put a second position in, because this failure right here, notice how the RL10 just keeps going. And then above this thing, you could enter there. I probably want him to take this exit, especially if I had a second position in, then I would definitely want to take the sniper. But because he's got one position in, he can give that a little more wiggle room. He's probably using the Bollinger Band mean. And so that move doesn't get him out. And then after this gap up and resume, it's now up in here, and he just moves the stop from here to lock it into the PSAR. Now he's using the sniper. And this is probably, if that's one risk, this is probably 1, 2, 3, 4R locked in with 1R of play. This is where I would be considering adding a second position right here, because if it takes out that little resistance, then that thing could really go. So I'd be looking at adding a position. Here's an open swing trade. You can see he set this up as a 1, 2, 3 off the daily. You have the harsh, you had this nice run up and then a huge gap down in Intel, and then the harsh sell off. And then there were 4 days in a row where it failed to fail further. And now 48 looks like a reasonable position, a reasonable support. So now I've got strong support here. And then he frames this trade over here on the 30. And here was the sideways pinch and the bottom support. That's this. And then it makes one leg up, pulls back, doesn't even fail through the dragon to the PSAR, but takes off again. So now he buys the breakout above the above the RL10. That's a emerging dragon because it breaks out above the hump of the dragon. So he buys this with a stop again down here at the PSAR, or maybe in this case here. And then a higher low, a higher low. This thing is starting to work. This would have been a tempting place on the Z3 pinch to add a second position. And so would this one or this one. But in any case, what he's got is a really nice trade working with an entry with his entry here, his wrist box there, and he's got about 1, 2. He's locked in 2 units of reward with this stop. And yeah, he gave back probably a third unit of risk, but it held. And now my thought would be, if this thing opens up and continues to go, so this is Intel. If we see Intel better than the QQQ, and if that's better than SPY on Monday, then if the S&P is good, and if the Qs are better, and then Intel is still best on a percentage basis, this is where I would add another position. Take one of those units of reward and just make that a new purchase. Okay. All right. That's all the charts. So that's everything for tonight. Tomorrow night, 8:30, setups for the day trades and whatnot. So thanks a lot, guys. And we shall see you tomorrow.